Okay, I know it seems like we started this problem in 1946, but we really didn't. This is where we left off in part 3 with the adjusted trial balance. Now we have to make the income statement. So let's go through and pick out the accounts that we need for the income statement. Remember, an income statement is revenue and expenses. So let's take a look. We have tuition fees earned. We need that number. We need training fees earned. We need that number. We need some expenses. So we have depreciation expense, equipment expense, salary expense, insurance expense, rent expense, supply expense, ad expense, and utility expense. So I think that's all. Let's see. Dividends, that's statement of owner's equity, retained earnings, equity. Unearned fees is a liability, because remember, the unearned is the important part there. Payable liability, cumulative depreciation goes on the balance sheet. It's attached to the equipment. Same there. Yeah, so that's what we need. So we're going to copy those over. So I'm just going to copy them down into my income statement. So I have fees earned, $131,400. I have training fees earned, $45,000. So my total revenues are $176,400. So because I'm an accountant and therefore anal, I'm going to go check them off. Now I have 8 expenses. I want to make sure I get them all. So I have my depreciation expense for the professional library. Let me get a different color here. Of $7,200. I have my equipment expense, depreciation expense, $13,200. I have salary expense, $50,400. 72, 13, 2, 5,400. I have insurance expense, $2,400. I have rent expense, $36,000. I have supply expense, $5,200. Let me get those. 24, 36, 52. Advertising expense, $6,000. Utilities expense, $6,400. Do I have 8? That's fine. Did I 5, 6? Yep, I have 8. Okay, I'm going to add up my total expenses. My total expenses come to $126,800. Therefore, my net income for the year is $176,400 minus $126,800, $49,600. That's my net income. Now remember, that net income goes to retained earnings. That's my next statement. So I need to take this number and go to my statement of retained earnings. Here's my statement of retained earnings. My beginning balance in retained earnings, $80,000. Plus my net income, $49,600. That gives me a subtotal of $129,600. I have some dividends, $50,000. They're paid out of retained earnings, leaving me an ending balance of retained earnings of $79,600. I want you to see what's happening here. We started out with all our accounts. Then our revenue and expenses went to our income statement. We figured out the net of those. We then went to our statement of retained earnings. We took our beginning balance and our dividends. We added the net income for the year to come up with our ending balance. This number will now go to the balance sheet, and that will complete the accounting cycle for this problem that began at the turn of the last century. And again, what we're going to do is we're simply going to take the numbers that we've already worked on and go through and grab each number as we need it. So, and you don't necessarily have to do this in order. You just have to make sure you get them all. So, if I were you, I would get the equity while I was here. I have common stock. Of 100,000. And we're just going to work our way right up the balance sheet and filling in the numbers as we go. Common stock, $10,000. Common stock, $10,000. Retained earnings, we just figured that out, $79,600. Our total equity, therefore, is $89,600. Now, let's work our way up the balance sheet. We have unearned training fees. That's a liability, $7,500. We have salaries payable, $400. We have accounts payable, $26,000. We add those up. Our total liabilities are $33,900. So our total liabilities and equity, those two, $123,500. Okay, $123,500. Now we know that if we've done everything right, our assets will equal that same amount. So going back and grabbing all of these numbers, I have cash of $34,000. I have accounts receivable, $7,500. I have teaching supplies, $2,800. I have prepaid insurance, $9,600. Now my professional library, we're going to show that as $35,900. minus the depreciation of 17,200. So the professional library comes over at 17,800. That's showing the asset at net. Full value minus accumulated depreciation, book value. We'll do the same thing with the equipment. 80,000 minus the 28,200. That comes over to 51,800. Again, that's at net. We add those all up. 123,500. That does indeed match that. We have finally finished this problem that I was beginning to wonder if I was going to live long enough to see the end of. That finishes problem 3.3a.